What's up, guys? Taking a look at an energy stock here. Um, some might call it dumpster diving. I just read a couple of places that are lowering their rating on here. They don't like it. It's got its issues, that's for sure. But at the same time, that's what I do. I buy stocks that nobody likes. And actually, I just realized that for the past 6 months, I am down 2% on my investment. I think it was 2%. But that's all going to change because I set up investments to dollar cost average each one of them. You know, you know, different type of dollar cost average, and not weekly investments. But when some of my shares get down, I just buy more. I calculate what it takes to get them back to a decent level, and I buy them there, and it usually works out for me. So after that, I should be back up within a few months. Let's see where we go. But this is something I just looked at. I usually buy Alliant Energy just because it's my local company that I use. I feel that it's good. I think Alliant has almost a 4-point dividend, if not a 4-point dividend. Um, this one has their dividend yield is 5.60, forward P 14.31. You can see here that their earnings are down this year. Next year they're down, and that's been seen in the market. The market has seen them, and you see sell ratings, and you can see where they've been. If you look at this one, just in their 1 year, they're up at 44. One point in time above A. Doesn't matter, but when you're looking at them, not the safest bet in the world, but they do have some quality. Um, they do have some quality things about them. Like if you look at past 10 years, notice that says this gap right here. For the most part, dividends coming in, and 5.67. I don't know how long that's gonna stay. 52, 52, 52, 52.5. So I mean the dividend's been sitting steady for a while, but obviously look over here. Even with a 5.9% dividend yield, Exelon is overvalued. That's just how they feel about it, and that's fine with me. Feel free to say it's overvalued, and you know, the way that I invest is different. I find something, I get my foot in the door, and when it falls, I buy some more to average it out. And if you're pinching pennies, that's a dumb way to investment. And it's also, if you're spending a big chunk of your change and you can't match it up later on, that's also a bad way to invest. But me, that's why I stick to my $100 and $500 rule. This will be a $100 investment probably, because $100 here, $100 there, wherever it goes, I'm gonna be fine. But if, let's say I put 20 grand on this, I won't be able to match 20 grand in 2 months if it goes down to 16. I can't just say, oh, I just got to put another 20 grand and it'll be alright. Because that's more money than I can afford on just one stock. So I'm a patient investor, and so I'm gonna probably stick in for $100 coming up here. And with ShareBuilder, you get only 12 free investments with your thing, and then after that it's $1. So I'll pay $1. So I'll put in $101. $1 that will go into fees, 100 of it will go into this company, and it'll automatically trade on Tuesday. And it might be up $4 that day, and I'll still have to buy it. But as far as like automatic trading goes with ShareBuilder, I don't really see many days like that. And if it's up too high and you don't want to buy anymore, you can cancel your trade before it goes through. So I mean, automatic investment is not that bad. It's not as perfect as limit, setting the price that you're willing to buy, limit order, or whatever it is. But for me it works because I don't like to pay a lot in fees at all. Like I mean, I traded pennies before, and everybody knows when you're trading pennies, you're losing on fees. I mean, I made plenty of money in capital gains, but they all went to fees basically. But, hold on, let me check out that one stock. The last penny I ever did. I bet you that just tanked. I got out when it was right up near $3. Not quite $3. Look at this. Ugh. I knew it was a pump and dump all the way, but I saw it. It was being pumped well, and I bought it. Still, I didn't make much money because of fees. So I don't understand how people trade pennies. But yeah, big dividend yield, overvalued, but considered overvalued by most. But if you buy it here, it goes down to 29. Buy it again, goes down to $3. Buy it again. Not really. If it goes down to $3, something's wrong with it. I'm just joking. There's times when I sell. There's been a few times Chimera had to sell when it was ugly. HGT I sold at like 12 or 13. That made me mad because well, my problem with HGT is I looked at some things. I didn't focus on some of the bigger things where you look at Pulling Myself Up. I think that's his name. Pulling Myself Up. He's smarter. He does a lot more research than me, so he knew the things that I didn't know about it. But then when I got back in, which I did, I got in at $6. I'm up. I don't know how much I'm up. I'm up a fair amount on HGT. I mean, it's nothing pretty. And really, I shouldn't be investing in it, but I'm like that. I invest in the wrong things for sure. But so far, if I sold it now, I'd make some money. Not a lot. I don't have a shit ton of money in it, but I could make money off of it right now. The dividends, they're pathetic now. They're still monthly though, so I mean, pathetic monthly dividend. Not even a penny now. But maybe someday it goes back up. And I don't know. I remember looking at it back in the day, and I was like, oh man, this looks good. I don't understand why it's so rough. I don't know what I was thinking when I bought it. But I started buying this. I think when it went down, I had about $800 into it, or 700 or 600. And I sold it at like 12. No, where is this? I sold it at like 13 or 14, and not because I knew something and I knew it was gonna tank like it did. That's not the reason that I sold it, because I didn't know that. I had to sell it because I wanted to do that Cephate crap, and I was already down on this one, and I was like, screw it, I'll just get out of this. Maybe invest in it later, but I'd lost my faith in it. I read bad things about it, and it's not something I was comfortable keeping, so I might as well have taken the money out. And then I took that money out somewhere around here, wherever, I don't know. Then I bought Cephate when it was going up, and I used that money. I don't know what I made on that, not much. Then I paid all those fees, and I took that money out. And I put in something, and I lost another $100 on that other thing that I put it in. And then I averaged it out, and I ended up being up on whatever it was. I don't know. Big train wreck with the money I spent on HGT at that point. But then I ended up eventually getting back into HGT. But I don't have much. This is actually not one I'm putting. I'm not even putting 100 in on this. When I buy this, I buy like $20, $25, or $50 worth. Just depends on where I am. Right now, with me being up, I'm not even buying it, which is different. But yeah, I'm not up. I mean, when I go up like 10 or 20%, I don't want to average myself down. Like with JP Morgan, I'm up what, 15, 20% on that one. I'm pretty sure, and but I don't want to buy it because I'm up. Isn't that weird? You know, I buy things when I buy more when I'm down. I don't really buy it too much when I'm up. But for some reason it works for me, and this still looks good. But you guys saw the videos if you were watching my channel. You saw me talking about investing in JP Morgan when I was in the 30s, and I did. But I'm not doing it anymore. And even though it is probably a good investment, even at this price, it's just not something I don't like to. I like my percentages to be high. And if that means not investing in a good company, I do that. It's not the smartest thing in the world, but that's how I do it. So hopefully JP Morgan keeps on going. Garmin, I just put in to buy some more Garmin. 4.62 dividend yield, P/E ratio 12.93. This is a small investment too. I think I'm only buying 40 worth of Garmin on my. Yeah, I'm a small-time investor because I buy so many stocks. I can't just I can't throw down 500 on every one of them. So the ones that I'm not really that interested in, like Garmin, 4.62 dividend yield. That's why I'm interested, obviously. And you look at Garmin, and it's a 4.62 dividend yield, but it's also, to me, when I look at a company, I say to myself, I kind of know if I'm going to stick with it long term. And with Garmin, it doesn't feel like long term as much. But I'll take the dividends now. I don't know how much I already have. I've been investing in Garmin for a little while, but not too long. But when it comes time to sell, being that I'm only buying one share at a time, which is uncommon for most anybody, the fees are going to hit me a lot harder than they would hit normal people. So I might. That's not the best way to invest at all. It's just the way I do it. And some of the things I do, I know, may not be the smartest, but I don't know. That's what happens when a guy like me comes in and plays the stock market. When you play it, there are people who are very smart investors, and then there are people like me. I'm not a smart investor. I don't know if I'm playing like a game with it, but for whatever reason it works. I mean, I've read many books on all the smartest ways to invest. I drip invest. I do that. But at the same time, I mix it up with the things that in my mind seem to work. And right here, the reason I'm only buying one share is because it's just like I'm kind of like putting a little bit into the pot, and then if it hits a low, like a dip where I feel like it's time to buy, then I'll hit it with a big chunk of money. Not a big chunk of money. With something like this, I might hit it with $200 just to put myself in there where the money's good if I feel like it's going to go up. But if I don't, like in a dip, like I'll be like, oh, it's at like 36. Maybe I should put in at 36. I wouldn't put 200. I'd probably put $100 in right there. Like, yeah, I should put in some money, get my my losses down, my loss percentage or whatever. Then I'll hit that up, and then I'll have more, and then I'll go back up, and I'll kind of chill out for a while. Start putting like $40 like it is now. It's been going down too. I bought it right around 40, so I'm down on this one. I don't know what it's done in the last 5 days, but yeah, I'm down on this. So I put one share in, get my 4.62, and then when it goes down further, where I like it, I'll buy a lot more. I don't know, guys. I'm probably confusing anybody who's even listening, but when it comes to investing, my style is unique. And most people would say it's not going to work, but before I really played the stock market, I played stock market simulators forever. I played 20 of them at a time. I lost my ass off at the beginning before I knew what dollar cost averaging was. I just lost my ass. they give me let's say they give me 100,000 to invest in. I put $45,000 on one company right away. Then when it goes down, I ain't got no money left. But you do it long enough and you kind of figure out. You gotta be patient with your money. It doesn't matter if you have $1,000,000 now or you have $5 now. You have to put an amount of money where you can match it later on. And no, you're not gonna get like, oh, I wish I would have put all the money down because I would have made a big chunk of money. I'm not into fast money. I like long. To me, this isn't all about the money. It's about winning the percentage war. I've got to be up if I'm gonna win this game. So I can't just throw down all my money on it. I don't know. But now my simulators. I don't know. I know on Facebook Trade Fields. When I was playing that, I played it for 6 months. I got up like $4 million. Of course, I made some good. There's some good things I saw that happened to me. But when you can gain 40% in 6 months, something's working. And the simulator, I used to use Investopedia, but now they spam me so much I don't even use it. But simulators are. If you're learning how to invest, you don't want to start out using your own money. You should definitely use a simulator because the learning from the simulator is exactly the same. I mean, Trade Fields, Investopedia, they pay you dividends. They do all this real shit. It's just a really good way to learn. Alright guys, I'm going to go. Subscribe to me if you're not subscribed. I usually talk about investing. A lot of times I just ramble about investing like I did here. But yeah. Thanks for watching. Comment and share your knowledge.